But worth mentioning, that improved movements in terms of that iron ore price. Look, expect that to lend support in particular to the miners today.
I think it will, and probably commodities in general will be one of the themes across the market today. They were one of the better performing asset classes overnight. We saw most of the base metals just tick slightly higher. Oil was fairly flat, but as you mentioned, the big standout there was the iron ore price, which jumped 3%, and it's up above $139 a tonne at the moment. It's a big bounce back from those lows of $86 seen in September. And we saw Fortescue and other iron ore miners put in a big performance yesterday. Certainly a lot of positivity put into the iron ore space by Fortescue restarting their Kings project yesterday. But I think the iron ore performance of these stocks has also been assisted by that big bounce back in iron ore prices. So I think the iron ore space will be one to watch again. We'll hope to see Fortescue and the other miners continue some of that positive momentum yesterday, supported by that higher iron ore price. I think on the market today, we'll also watch the retail sector. That was a big outperformer yesterday on the market. We'll hope to see some of that momentum continue through today. And I think the Aussie market recently over December has been supported by markets around the region a lot. We've seen both the Nikkei and also the Chinese market, the Shanghai composite, perform very well over December, and the Aussie market often takes a lot of leads, particularly in afternoon trade once the Shanghai composite opens, from Asian markets, and they have been performing strongly, helping our market move higher. And I think this morning the outlook seems like we're going to be moving higher. The SPI futures are a bit higher. But over the past few hours, we've also seen the Aussie dollar just tick slightly higher, which is also often an indicator in terms of equity movements for the Aussie market in the morning.
Well, Tim, just on some of those iron ore stocks, you've got Fortescue at the moment up 1.8%. You've got Atlas Iron up 2.33%. No movement as yet for Rio, but BHP Billiton up over 0.5%. Look, can they kick on? It's looking like a fantastic end to the year for them. Certainly hasn't been well, it's been a volatile year, to say the least, for a lot of these miners.
Certainly has. I think, in my opinion, they are due for a little bit of a rally now. I mean, Fortescue now, it's around, what is $4.60. I mean, it fell to lows close to around $3, I think, but it's still well below some of the levels we saw earlier this year. It touched, almost touched as high as $6, I think, and a lot of the other smaller and mid-tier iron ore miners have been beaten down significantly as well. But the iron ore price has been very volatile. We saw comments coming through Dow Jones Newswire yesterday that comments from CEO of Fortescue that he expects through 2013 the iron ore price to remain around $120 a tonne, but he does expect the volatility to continue a little bit. A lot of investment houses are putting target prices for iron ore around $130 a tonne through 2013. As the Chinese steel industry improves again, we've seen inventory levels of iron ore decrease significantly there, so they are starting to buy up some more iron ore again, which has been supporting the spot price.
What else do you think our market's going to be focusing on today? We know, expectations, very light volumes, again, to be a dominant theme. We do get some China data out today, some Japanese data out today. Just wouldn't they like an uptick in inflation? You've got other people wanting to keep inflation in check. They'd love a dose of inflation.
Well, I think we can thank Japan for releasing this data today, because it gives us one other thing to talk about other than the fiscal cliff in the US. But there's a big slew of Japanese data coming out today, retail sales, industrial production. But I think inflation will be watched very carefully. We know that there is deflation there in Japan at the moment. Market expecting inflation to contract around 0.5% year on year through to November. And the Nikkei has been performing very well recently. You've got the yen weakening significantly. The yen has fallen back something like 8% versus the US dollar just in December alone. And this has really pushed the Nikkei higher, which has risen around 9% just in December. Also, I mean, the expectations of considerable amounts of easing is really pushing the Japanese yen higher, the Nikkei 225 higher. And with deflation being a major issue, Japan at the moment trying to turn their economy around, move from contraction back to expansion, deflation will remain an issue when they're trying to do that. Across the other data, probably expecting industrial production to remain quite soft in Japan until some of this easing starts to flow through. Retail sales expected to bounce back a little bit, but in terms of inflation, there is a lot of room for movements in terms of further stimulus in the future. We've already seen, I mean, it's in deflationary territory at the moment, so a long way away from the 1% previous target. We've also already seen that target increase to 2%, so a lot of room to move there. An article I read this morning saw Goldman Sachs buying into shares in Japan, particularly within exporters and financials heading into 2013. So possibly 2013 could see continuations of good gains across the Japanese market. Financials exporters to benefit obviously from a lower yen, but financials as well, with the economy hopefully improving, inflation of asset values, maybe some more loans coming through from the banks, and some more risk appetite from investors. 2013 could be a positive for the Japanese market.
It's interesting. You've got poised obviously to wait for that Nikkei 225 to open. You've got traders suggesting they could have, if another positive day today, you could see it log its best yearly gain since 2005. Certainly a lower yen, as you've seen, is going to, as you say, be very supportive of that. Worth noting some of those iron ore plays now. Rio Tinto up 1%. You've got Fortescue at 1 point up about 2%, and Atlas still up over 2% at the moment. BHP up 0.7%. The energy plays doing well. The banks as well mildly positive. So all lending support to the broader index. What about gold though? Just taking a look, we've got Newcrest Mining, the biggest gold producer on our market. It's off by about 1/3%. People still scratching their heads as to what's going to be happening with the gold price. You've had people suggesting 2,000 troy ounces. Just a few months ago, you'd have thought all this stimulus and so forth would have been supportive. It just hasn't been the case.
Well, that's right. And looking in the mining space, Newcrest has been a big underperformer, while some of the other mid-tier and smaller cap gold miners have actually performed quite well. The gold price hasn't actually moved all that much over the past week. It's been stuck around that 1660 level. It has slowly been ticking higher over the last week, but very, very subtle moves there. The gold price has eased somewhat over November to December. The US dollar's held up fairly well. I've seen a little bit of technical selling. 200-day moving average is a key level for the gold price. It's broken below that, but I think looking forward, there was a lot of calls for $2,000 an ounce. We've seen significant resistance around the 1,800 level. Gold's hit that level a few times now and not managed to break through that. But I think expectations are that demand for gold remains strong. Demand from central banks moving into 2013 will still remain strong. You've got the US with open-ended quantitative easing at the moment, so you've got inflation concerns there. Gold obviously a good hedge against inflation, and also it always holds that safe haven current appeal for investors. But over the past 18 months, as I said, 1,800 has been resistance, and now some people are questioning whether we can actually break through that level. But if you actually have a look at the a 10-year graph of the gold price here, you can see that back in 2008 to 2009, across 18 months, the gold price really struggled to break through that $1,000 an ounce level. It was over that 18-month period, it hit that level and came back around 4 times. But after that, once it did break through, the gold price rallied 90% up to those $1,900 highs. So once it breaks through the $1,800 level, who knows?